Hi, and welcome to the Stock Scores Market Minutes for December 10th, 2017. Change is constant in the market. What matters to the market today may not matter tomorrow. The market moves on expectations for the future. It really doesn't care about what has happened in the past. Instead, it efficiently prices in new information and then looks for the next bit of new information to price in. It's important to keep this in mind because there's a tendency to make trading decisions based on what has happened in the past. But remember that that information has already been priced into the market. The market moves on what will happen in the future, and the market is a discounting mechanism for what will happen in the future. And when you see movement in the market, it's not based on what happened before, it's based on what people expect will happen in the future. All right, let's get into this week's market analysis. Draw some lines here. Here is our upward trend line on the short-term chart for the S&P 500. See, we've had a fair bit of volatility in the last little while. We are stuck under this level of resistance, but the bottoms are rising from left to right, so that is a bullish market. The fact that we have this volatility means that there is a little more uncertainty in the market right now. Looking at the longer-term chart, you can see that the trend is going parabolic somewhat, getting steeper and steeper. That is a sign that investors are getting a little irrational, pushing prices up perhaps too high. And that typically comes before a correction. Now, it doesn't mean we're going to get a correction next week. It could happen, but it could be months before we get a correction. What we want to watch for are a break of those upward trend lines on the shorter term chart. Moving along to the Russell 2000, which has really lagged the large cap market, you can see that it is in an upward sloping channel. And we had a close below the open this week, but it's by no means overextended to the upside. I think it's just generally grind its way higher, but it's not super exciting yet, but certainly there is momentum picking up. Canadian market actually had a pretty good week this week, but it rallied up to resistance where I expect it will get stuck. So we had 3 or 4 days of upward movement there. Now that we're at that resistance level, expect it to stall. We'll see how long it stalls for. When we look at the longer term chart, you can see that we've been stuck in this sideways range for 5 or 6 weeks. But if we can make a big break through that, then we should continue into the next leg of the upward trend for Canadian stocks. TSX Venture, pretty quiet right now. You can see that we're in relatively narrow trading range. However, there is good opportunity in this market. You just have to be very selective. The overall market itself isn't great, but there are stocks within this market that have been able to do fairly well. U.S. bond market, pretty boring. You can see just a sideways bit of trading action there. Let me get on the right chart, sorry. We're building this pennant pattern right now. What we want to see is, are we going to break up from that pennant or down? And remember, whatever happens on this chart, the opposite happens in interest rates. So if we get a break to the upside, that implies a move down in interest rates. So you want to keep an eye on this chart, but for now, it's not a real important one because it's stuck in this sideways trading range. US dollar made an interesting move this week. We talked a little bit about this last week, the fact that it may build this rising bottom and test the downward trend line. Well, that's looking like what will happen. And so what we want to keep an eye on is, do we break this downward trend line? And if so, you should expect that the US dollar is going to run higher. The fact that it built this rising bottom is quite important because that means that there is some optimism coming into the US dollar. And if we can break that downward trend line, we're setting up for a good run back to the recent highs of the US dollar. Gold chart broke down. That's partly because of that strength in the US dollar, but I am now bearish on gold because we've broken that upward trend line. We broke down from the pennant pattern, and that implies further weakness in gold. And so if you own gold stocks, I would be cautious right now. On the oil side, we are stuck in that sideways trading range that we've been in for basically 2 years. We're at the top of that range, and we're trading with very low volatility at the top of the range. So it is possible that we will get a breakout and through that resistance, but until it happens, I remain neutral on this market. If it can happen, then we can get bullish at that time. But for now, I would be relatively complacent about this market. Look at how the volume is just slowly falling off. Not a lot of excitement here. Again, if we have a good week and we can break through that $12 level on the USO ETF, then that'll be a positive sign. And finally, the fear chart. We had this little spike in fear, another little spike, but we see it over and over again. These spikes don't last long, and we're back to the lows for the fear index, the VIX, and so I would not expect anything critical to happen to the market right now. The market isn't expecting any drama, but that can change in a day. So you always want to keep an eye on this chart to see if there's any pickup in the VIX. All right, so my outlook's then bullish on U.S. stocks in both time frames. Canadian stocks bullish long-term, neutral short-term because we are at that resistance level. Gold bearish on both time frames. That is a downgrade this week. Oil neutral on both time frames. The U.S. market does feel toppy, but there's still no break of the upward trend line to warrant a bearish outlook. So we have to remain positive, but perhaps a little bit cautious. The Canadian market had a good week, but it's still stuck under that long-term resistance level. Gold broke down this week and appears likely to continue lower. Oil is stuck at resistance and needs a catalyst to break it through. And as I said, fear is low. All right, now I want to show you a chart of a day trade that I did on Monday using my worm strategy. On that candle right there was my entry point. You can see the little pink dot. That is my action candle. Went for a very nice run. And the reason I show this chart is because on this particular day, Monday, Disney, which is the stock that this is here, Disney Corp, it had a great move and a nice RR move. It went up 9 RR by basically lunchtime. And so it was a good trade. I ended up getting out, I think, right about there on the little bit of the pullback there. But if you go look at the daily chart since then, this stock has fallen from, the 112 range all the way down to 104. So the point is, it had a great day on Monday, but the market forgot about that on Tuesday and sold it off Tuesday, Wednesday, Thursday, Friday. As a day trader, we can take advantage of that strength with the quick move higher. If you're an investor, that can be pretty frustrating because one day everything sounds like it's great at the company, the stock makes a big move, and then the following 4 days it gives back all those gains plus more. Why? Because the market is moving on some new information that the market didn't know about on Monday. And that's the way the market is. Every single day, there's constant change in information flow, and you just have to realize that what can be the case one day can change the next. All right, well, that has been the Stock Scores Market Minutes. I hope you've enjoyed it. If you have, please subscribe to the channel. You can make a comment on the channel, tell your friends, and most importantly, trade well.